Yo guys, welcome back to Stock Talk Insider. Today I want to talk about SOFI in its general and its whole. So yeah, we have gotten the Q2 earnings of SOFI. I wanted to talk about that a little bit. They were phenomenal. I was not planning on buying more SOFI. I had already around 800 shares, but last week I bought 100 shares more just because of the earnings that were so phenomenal. And yeah, that's something I just wanted to say. I am buying more, and my price prediction by June, if nothing really happens in the stock market, you all know how that goes, will be $35 by June 2026. If you get a very big bull market until then it will probably be higher than that. But yeah, if macro data stays in line, we will probably hit between 30 to 35. I believe 35. But yeah, if market goes very red and down around those times, around like May or something, then we will not hit it, of course. But it's not about what happens. It's just if macro data stays in line and just does what it has to do, then we will hit $35 in my opinion, if not sooner actually. So far went up around 17 to 18% since the Q2 earnings dropped. Then the guidance was also very good and all of that, but they did some share dilution. Because of that, the share price just went down 15% as fast as it went up with earnings. So yeah, it went back down, but at this point it has a little bit consolidated, and I believe that SOFI will hit very nice numbers for Q3, sorry, and I will be buying until then. And again, I do believe SOFI is just a very big, strong, fundamental company in the making. And they're profitable, so yeah, not really very big, how do I say it, expectations or something in things going bad or something. So yeah, it's just very positive. The only thing is it's a little bit sensitive on things like rate cuts and things like inflation, all of those things. That's very sensitive stock and company for those type of macro data. So if that just comes in line and does good, SOFI will also do good. Looking at their members, they just hit it very, very good growth in members, and that's one of the big things I always look at, because you can't get very good revenue if you don't hit the member growth you want. So that's number one priority for me, member growth. Of course, in coming years it will slow down because there are just X number of people alive, so that's pretty logical that you can't have that growing at very big paces years, 400 years straight, just to say it. So yeah, at one point I just mean that those growth numbers will slow down, and then we will have to make the people that are at SOFI very comfortable to go get those loans, go spend more, but of course therefore you also need steady macro data. So that's again coming back on why it's sensitive for SOFI for having those higher rates or all of those things. So SOFI I am buying. Going straight into it is just not another bank. They also don't have buildings or something where they get their clients to. They have some offices, of course. That's very reasonable, and that's just logical. But for the clients itself and for the members, SOFI calls them members. For the members, it's all online on the website or on the app. So that's everything for SOFI, where you can go do your financials. For the banks like JP Morgan, Goldman Sachs, and all of those older banks, they all have buildings that they have to pay things for, and just I don't know the word in English, but they have to pay their buildings, and that's all. Well, that's literally a lot of capital that goes into just buildings to get them over the whole world, or for some banks just in America. But they lose a lot of capital on just doing the building stuff, and SOFI does not have that problem. They are a new age bank, so they are also having pretty young members coming in, and the one time you lock in a member, normally someone would not go to another bank that fast, and especially if they give them good products. But just coming back to the essential thing I want to say is that SOFI does not have buildings for getting clients. They just have their online stuff and their offices, of course. So that's a lot of capital that they can spend onto other things and other upcoming products maybe, and they can just reinvest all of those capital things into more gains. So that's one thing I wanted to say. It's a full fintech ecosystem that's been posting strong growth. I walk you through the latest figures, explain why SOFI's competitive advantages go beyond the traditional bank, and show a realistic scenario by which SOFI could hit $35 per share by June next year. Let's go. So SOFI is also GAAP profitable since 2 years ago or something, and has shown a strong revenue growth, and added hundreds of thousands of members in recent periods, and holds a significant base of customer deposits. That's not a flash, that's scale. Further, we have record and strong quarters. SOFI delivered strong net revenue and continued to show profitability, prove they can scale both growth and earnings. Deposit growth and funding. Customer deposits are large and growing. Cheap, sticky funding that fuels lending. Member and product scale. SOFI continues to add large numbers of new members and new products, showing acquisition strength and cross-sell. Low mortgages momentum, originations and mortgage activity have been strong. Management actions. Management has updated guidance and emphasized continued focus on profitable growth, momentum conferred by leadership. If you go to my positions, I buy in euros because that's just because I'm Belgian. That's easier for me to do and to have a sight on things. I have 900 pieces of SOFI, so this is probably around, if you look in dollars, $20,000 or something position. For me, 17,000 in euros. I have around 5,000 euros in profit, so that's already pretty nice profit. If you know that I have my base cost is 13 euros, so 13.1 euros, and I have already $5,000 in profit. That's pretty nice, I do think, and I believe that they go to $35, so that will go to 10 to 15,000 in profit coming June. So 900 pieces, I want to go to around 1100. That would be very nice for me to own, and then I probably would stick to that price, unless SOFI goes to like prices like well, just be realistic, 14, 13, but that will be very hard, because also the short players and the bears on SOFI have been going down a lot, because SOFI is above $20 and just has a very strong fundamental that is just growing by 44% in revenue. So it's not a lot to be bearish on. Going into their earnings. Again, this is just the highlights, of course. So $858 million in revenue, 44% year over year, very big. Also, fee-based revenue is up 72% year over year. Financial services and tech platform revenue is up 74%, so year over year. Tangible book value growth of 1.1 billion year over year to 5.3 billion. So yeah, that's all very good. And net income is also up 11%. So net income of 97 million, which is very strong. Of course, you can also look at the earnings yourself, but we're just going back into script so I can keep it very clean and information based. SOFI operates across lending, financial services, so bank-like products, and technology platform, payments, processing, and BaaS. Multiple revenue streams reduce reliance on any single cycle. SOFI focuses on increasing products per member. Once a user joins, they're offered checking and saving investments, credit products, loans, insurance, and more. Cross-selling increases lifetime value and makes customer stickier. Cheap, sticky deposits as a funding advantage. A large deposit base, especially deposits tied to direct deposits, is inexpensive and reliable funding for lending. That's an edge versus fintechs that must rely entirely on wholesale funding or securitizations. Tech and base scale. Their tech processing and platform capabilities serve not only SOFI's retail business but also third parties. That creates recurring fee-based revenues that are less cyclical and than lending spreads. Distributed origination and funding partners. SOFI's model includes external capital and funding partners for originations, letting them scale organizations faster without linear increase balance sheet capital. SOFI is an ecosystem. Acquire members, sell multiple products, fund cheaply, and scale technology services that is fundamentally different from a legacy retail bank. So cross-sell and retention, more products per member, raise switching costs and lift lifetime revenue. Sticky funding, direct deposit, linked deposit act as low-cost stable funding for loans. A durable margin advantage. We also have platform effects and scale. Tech processing, revenue base, and loan platform services create recurring income and operating leverage. Data-driven underwriting, years of lending, data improved credit decisioning, and loss control versus newer entrants. This is not an impregnable moat. Traditional moat evaluators may still argue that this isn't a century-long moat, but SOFI has multiple practical defensive layers that matter operationally. In the most recent reporting period, SOFI is GAAP profitable. Highlight the deposit figure you want to show. Demonstrate scale plus cross-sell. The lending engine is active. Pathway to $35 by June next year. Is quick reality to reach $35. SOFI needs a meaningful percentage increase from typical mid-$20 prices levels. Achieving that requires two things together: continued rapid revenue and earnings growth and multiple expansion. Sustained top-line growth. SOFI continues to delivering high single to double-digit growth across core segments, pushing annual revenue materially higher through cross-sell mortgages and platform fees. Improving margins and recurring fees as more revenue comes from fee-based platform and services and operating leverage kicks in. Profitability and adjusted margins improve, reducing valuation uncertainty. If macro conditions stay reasonable, stable, and investor sentiment toward profitable fintech improves, SOFI could trade at a higher valuation multiple. Combined revenue expectations times higher multiple can imply a market cap consistent with the $35 shares price. Concrete illustrative math, a combination of materially higher revenues over the next 12 months plus modest multiple expansions could produce a market cap consistent with $35 per share. This is achievable if the company executes and the broader market rewards fintech growth. Important qualifier: this path requires decent macro stability, no severe recession or credit shock as said before. If macro conditions weaken, the timeline slips, the business progress can still compound and the target could be reached later or after a broader market rally. So bottom line, SOFI is more than a bank. It's an integrated fintech platform with sticky deposits, strong cross-sell, and growing fee business. The combination supports a realistic bullish case, and under reasonable assumption, $35 by next June is attainable, but it isn't guaranteed. If you like this breakdown, hit like, subscribe, and drop a comment if you want to follow up deep dive into valuation modeling and the spreadsheet behind the $35 per share scenario. That's the ending. I've said everything I wanted. If you want to look into the SOFI earnings yourself and you couldn't find the document, I linked the link below in the description. And then I just wanted to thank you for watching and clicking on this video. Probably if you can, subscribe to the channel for more, and I will see you later. Thank you and bye.